Good morning, and thank you, each of you, for joining us today. My name is Heath Tippins, and I'm the Vice President with the Cherokee Office of Economic Development. It's my pleasure to briefly introduce our panelists in the order they will be speaking and give you the format for today. First, we have our President, Misty Martin, who's President, obviously, of the Cherokee Office of Economic Development. Following Misty, we'll have Pam Carnes, who is the president of the Cherokee Chamber of Commerce. Following Pam, Mr. Drew Tonsmeyer, who's the area director at the University of Georgia SBDC at Kennesaw State University. And following Drew, our economist, Mr. Alfie Meek, who is the director of the Georgia Tech Center for Economic Development Research. In a moment, I'm going to pass to Misty, and she'll kick things off for us. As a reminder, viewers will be able to submit questions by clicking the Q&A button at the bottom of your screen. And in the interest of keeping this meeting on time, we'll be taking questions throughout and addressing at the end of each speaker, not versus at the end of the program. Also, thank you to the Chamber for partnering with us on this webinar, and thank you again to the viewers for joining us this morning. We hope that this webinar proves useful for all as we look for best ways to address current happenings surrounding the COVID-19 virus. So at this point, I'm going to pass to Misty. Misty?
Good morning. I wish I could see each of you. I think there's about between 160 and 170 of you on this call. So thank you for spending your time with us today. On behalf of our economic development boards, our Cherokee by Choice board, and our team, we want to thank you again, and also thank you, Pam, for partnering with us during this time. You know, it's such a difficult time, and I was on a call yesterday with some regional folks and introducing myself to some nonprofits that are trying to do work all over the state to support nonprofits across the state. And she said, "What do you do?" And I said, "Well, right now, we've been doing everything that we can to disperse information to our businesses across Cherokee County. But what we normally do is recruit companies to the area and help our existing companies expand, work with entrepreneurs and with filmmakers and scouts, and also work with our Cherokee Workforce Collaborative on workforce development issues." So as you can imagine, the last 3 weeks, we've been mobilizing our office first physically so that we can work remotely to support all of you, supporting the state of Georgia in finding industries that may be able to make supplies such as medical equipment and those ever needed PPE. And third, helping our companies navigate the shelter-in-place orders and the essential business definitions. And as Heath said, the purpose of today's webinar is to make sure that you have the needed facts so that you can understand exactly how the economic stimulus package can help you and your company. Going forward, we will be studying and planning for what the reopening of business looks like in the Atlanta region in Georgia, and specifically in Cherokee County. And so I think this panel that we have put together for you today will prove very useful. I've known all of these panelists for over 20 years, and they've been colleagues and friends of mine. And you all know Pam Carnes. She doesn't need an introduction. What you may not know is that she's been the president of our chamber since 1996. But the real tidbit is that we've known each other since 1990, because that's when we started working together at the chamber. Drew Tonsmeyer is a great friend and big supporter of Cherokee in our region. And you may not know that he's a former Woodstock resident, and we know each other from the chamber world from years ago too. And Alfie Meek really needs no introduction, but he's been supporting our state and the Atlanta region for quite some time. And what you may not know about him is he has been assisting our office for years with local impact analyses for economic development, business recruitment. And so we brought these people together because of their dedication to Cherokee County businesses, their dedication to our region, and dedication to our state. So we hope that this will prove useful to you, and we stand to help you in any way we can. Thank you.
Okay, thank you, Misty. Pam, would you like to give a brief update? I'm going to unmute your line now.
Thanks, Heath, and good morning. As Misty said, the Chamber is a part of assisting today in promoting this call, and we know that there are folks that are on here that are our members and that they keep track of what's happening within the Chamber and in the community. So we were pleased to partner with COED today to bring you this webinar, and excellent panelists, as Misty mentioned, with Drew and with Alfie. As Misty said, we have known each other a long time. It goes back to the fact that Misty is much younger than I am. She was the student worker from Cherokee High School who came to work at the Chamber when I was hired as the membership manager. So I'd like to think that we've grown up together, but I will always be older, and I've not been able to figure out yet how to make the clock turn back. But the Chamber, like COED, has worked from a different angle the past several weeks. Our team is working for our membership and our community from all corners of Cherokee County. We've had to think differently, but yet with the same focus and the same model that we had when we were within the bricks and mortar of our office off of exit 14 on 575. Now we just do it from a different location. But we would like to think that you don't see any difference, that you receive your emails from us, you know you can reach us by phone, and we are still there for you. We just aren't physically sitting in those normal offices. And that's what's happening with all of you as well. So we feel like that we are inundating you with information, but yet if there's something that we're not getting to you that you need to know about, or you're hearing about from one of your colleagues or in another community, let us know that. And that goes, I know, for COED as well. Let us hear from you so that we can get the information you need. And it may be people like Drew and Alfie have that at their fingertips, or it may be something that we've received in the countless messages that we're receiving daily that just hasn't found its way yet to the resource page on our website. So stay in touch and in tune. CherokeeChamber.com is our web address, and you can find information there, like I said, on our COVID-19 resource page. You can also find information relative to our membership and how they've changed their business practices, what their business climate looks like right now. So again, we are all in this together, and we're not planning to check out, if you will, after this is all said and done. We're going to be here for you just as we are now, and look forward to continuing to grow an economically viable Cherokee County, and doing that as a very healthy community. So at this point, let's stick together, stay together, and this too shall pass.
Thank you, Pam. Also, I wanted to mention, I neglected to do so when we opened, but our website is CherokeeGA.org. Should you want to visit that. We also have a COVID resources page that hopefully will provide some help to those who are looking. Also, I might urge y'all, if you live within one of our awesome municipalities, feel free to reach out to your cities as well. They will serve as a great resource. So at this point, I'm going to flip it to Drew. Drew, I know that there's a lot of people on the call that that are looking forward to what you have to say. So thank you again for your time. Drew, the floor is yours.
Great. Heath, thank you very much. And Pam and Misty, partnerships are not formed overnight. And so we've been working with the Cherokee Chamber since the SBDC at Kennesaw State opened in 1984. So the SBDC is a network of 17 offices across the state of Georgia. We're affiliated with different units within a university system, hence why I'm at Kennesaw State. And I've been working at the SBDC for 25 years. So we have seen our economy rise and fall, and small businesses react to that. And I just want to present a little bit of information talking about the different aspects that are part of the relief program reacting to the COVID-19. So if you allow me, let me just share a little bit of what's going on, and can then answer some questions that you might have. Just a quick overview. The CARES Act, as you'll hear it called, allocated over $349 billion to help small businesses react to that. And there are multiple components that are within that. And I want to share how each of these programs can work with people right now, but it's also part of our recovery efforts going forward. And those four major programs include a payment by the SBA on current and new SBA 7A loans, the economic injury disaster loan, the advanced portion that is in the economic injury disaster loan, and the Paycheck Protection Program, or known as the PPP program. And I'll go over a few more details with each one of those. With the SBA Guaranteed Relief Program, is the SBA will pay the existing principal and interest of a 7A loan on behalf of a small business. And this will be for the next 6 months. That can be great cash relief for an ongoing enterprise. If a borrower is currently on a deferment program, that 6 months will commence after that deferment ends. Many businesses reacted quickly and asked for deferments from their local banks, which they then provided for them. And it's not to exclude them from this amount, but rather if they have a 3-month deferment or a 6-month deferment, that 6 months of payments will kick in after that. And then this also extends to new borrowers. And these loans are guaranteed by the SBA, but these loans are still made by your local lending institution. But if you enact a new 7A loan before September the 27th, those loans too are eligible for a 6-month relief payment by the SBA on your behalf to your lender. We're still awaiting the actual legislation and guidelines to go from the SBA to the bankers. And it's just like everything has just transpired over the last 3 weeks. Every day, subtle things changes. And so some programs may not be fully enacted, but they'll be coming down the line. It's just that we have experienced something on a scale that is just unimaginable. And it just takes a while for some policies and procedures to get in place. Hence, like the economic injury disaster loan. The portal itself of how people apply to that has changed 3 times over the last 3 weeks. And now the process is very much streamlined to make it very easy for people to apply. Basically, this economic injury disaster loan is eligible for any small business as defined as having under 500 employees or having sales revenue below the SBA size standard for a small business. This economic injury loan can be up to $2 million. And these loan funds can be used for other operating expenses. It could be used for insurance. It could be used for advertising. It can actually be used for inventory purchases. So this can be used not only to recover or just react to the current situation, but recover into the months to come. These loans are credit scored, meaning they're looking at the basic credit analysis of that individual in that business, and the SBA is the one that makes that determination. These offer a very attractive interest rates. This is a fixed rate loan at 3.75% as an annual percentage rate that does not change, and these loans currently are set at a default for 30 years. They can be repaid earlier without any prepayment penalties. If needed, the next 12 months can also be deferred. So if someone applied for an economic injury disaster loan and suppose their funds came in on June the 1st of this year, they would not need to be making payments on that loan till the end of May of 2021. Another major feature within the economic injury disaster loan is a new feature that was part of the CARES Act, which has an advance of up to $10,000. The SBA is currently in their process working with the Treasury Department of how to distribute those funds. To give you an idea of the massive scale, last year the SBA provided funding for about 63,000 businesses. Now we're dealing on a scale of millions of businesses. Last year, the SBA gave out funds totaling $28 billion. Now we're at a magnitude of 12-fold over that, which is $349 billion. So the magnitude is changing the ways and procedures of how our federal agencies are having to react to that. So it's one of those things of be patient, following the guidelines. The funds will be there. It's just that it will take some time to all of these processes to be worked out. But one of the nice features about this advanced portion is that there is a note that says that this does not have to be repaid. This is another way of saying this is a grant type situation for a business. In addition to that advance, there's also going to be additional money that will be available that is part of the total loan. So for instance, a small business that applies for an economic injury loan, it could be that their loan is approved for $100,000. They will get a $10,000 advance shortly. And then the remainder $90,000 is what becomes on that 30-year term at 3.75. You can use these funds to pay normal operating expenses such as rent and payroll and advertising and inventory. However, if you also have the Paycheck Protection Program in place, you've got to use the PPP portion just for those payroll expenses. This program is also eligible for every small business, those that are organized as sole proprietors, as independent contractors, our tribal businesses, as well as cooperatives or employee-owned or ESOP businesses that have been in operation since January the 31st of this year. The newest program that came on board was just enacted, or the procedures, last Thursday. So this program is less than a week old. And again, the lending institutions only got their guidelines, say 6 days ago. So it's always taken some banks some time to get these policies and procedures in place that is very different than their regular 7A activities. But under this program this is to encourage to have businesses bring their employees back to work or continue to pay them during this crisis. The legislation called that the interest rate cannot be more than 4%, but the SBA has set the guidelines that is currently a fixed amount at 1%. Those eligible businesses include those businesses the SBA defines as small business concerns that have under 500 employees, but certain businesses like restaurants or franchises may be multi-location. It is based upon 500 employees per locations. And just like the economic injury disaster loan, sole proprietors, those that are self-employed, or those that receive a 1099 type contract or payment are eligible for these loans. One of the stipulations that was in the regular SBA loan program was a standard known as credit available elsewhere. That regulation has been waived, so you do not need to prove that you could find a suitable loan somewhere else. Also, this loan does not require any personal guarantees, nor does it require collateral. And there's no application fees or additional fees applied to these loans. These loans can be up to 10 million, but it's really based upon the total compensation of your payroll. Payroll is defined as those direct wages, but it excludes those wages of highly compensated individuals above $100,000. So basically what that would mean is if there's somebody within a company whose compensation totaled, say, $125,000, 100,000 of that would be exempt from consideration. So only 25,000 of that portion would be considered as payroll forgiveness. Following the proceeds of these loans, the businesses will be required to certify or prove that they have used these proceeds for payroll, for mortgage or lease payments, or to pay utilities. So there'd be some additional paperwork that will follow from our lenders back to our small businesses following this 8-week period. These loans have a very attractive condition, which is those proceeds that are received that are paid for payroll costs, including rent and utility costs, will be forgiven in that loan. So for instance, if this loan to a small business was, say, $60,000, then over the next 8 weeks, if that small business paid out wages, rent, and utility costs summed up to be $60,000, that entire loan would be forgiven. There is a stipulation that says that 75% of your loan proceeds have to be towards that payroll condition. Otherwise, there'll be a reduced forgiveness portion of that. Traditionally, when we have forgiven debt, that can be deemed as earned income on that borrower. That condition has been waived. So if your loan has been forgiven, you're not going to then be counted as that forgiven portion as taxable income, thus saving multiple taxes. And just to kind of give a comparison along these three different programs of the economic injury disaster loan, also called the EIDL loan, and the EIDL advance, and the paycheck protection program, or the PPP, is what that means is the lender for the EIDL loan and the advance is the SBA. So those applications are made directly with the SBA. Conversely, the PPP program is made with your local lender, with a banking institution. The maximum amount of the loan for the EIDL loan is $2 million. The maximum amount of the EIDL advance is $10,000. And the maximum amount on the PP loan is determined by a formula of taking your average monthly payroll, multiplying that by 2.5, and that is the maximum amount of that loan. Also given in that consideration of $100,000 cap as a maximum for any highly compensated employee. The application deadline for an EIDL loan is the end of this year, but for the PPP loan, the application deadline is June the 30th, unless these deadlines become extended. Eligible borrowers are pretty much the same as it's a small business as defined by SBA standards, which is basically an institution, organization that has under 500 employees, and it does include sole proprietorships and those that are independent contractors. With the EIDL loan, use of proceeds includes the rent, utilities, accounts payable, bills that would have occurred had the disaster not occurred. And so you get a lot of use out of these proceeds. On the advance, they can be used for the same purposes as your regular EIDL loan. They can be used for payroll, utilities, even paying off accounts payable that might be there. Conversely, the payroll protection program, the PPP, can only be used for payroll, but some additional expenses have been rolled in to be part of the forgiveness, which may include rent paid, utilities paid, and interest paid on existing loans. For the collateral, the EIDL loan does not have a collateral requirement if that loan is below $25,000. So if it's above $25,000, the SBA may require collateral. On the PPP loan, the collateral condition is completely waived. On the personal guarantee portion, an EIDL loan that is above $200,000 will require a personal guarantee, but if it's below that $200,000 threshold, then a personal guarantee is not required. And for the PPP loan, a personal guarantee has been permanently waived. There's some affiliation rules, meaning joint ownership of some programs. So on the EIDL loan, there might be conditions where that small business concern is part of a larger business concern, and there might be some applicable restrictions on what that affiliation might mean. The same is true on the PPP loans. And the condition of the credit available elsewhere has been waived for all three of the programs. So on the EIDL loan, that entire loan is not forgivable. The only portion that is forgivable is the advance that is up to $10,000. But on the PPP loan, 100% of that loan may be forgiven if that loan proceeds are used for payroll over an 8-week period. And let me explain the 8-week period. That 8-week period, or the clock of measurement, begins when the loan proceeds are received by the borrower. So you may make an application today, but those funds may not come to you for a week or two. That 8-week period might begin 2 weeks hence, and then it will be followed out for the next 8 weeks. And so need to be thinking about how you want to track those expenses, so we'll make it easier for you to calculate your forgivable portion of those loans. On the interest rate, the EIDL loan has a 3.75% fixed rate loan. There is no interest charged on the advances. That portion is completely forgivable. And then on the PP loan, the current interest rate is 1% fixed over a 2-year period. Mentioned that the EIDL loan is for 30 years. Conversely, the PPP loan is going to be termed out for the next 2 years. And there are no prepayment penalties for any of these loans. You can pay them back early. A common question has been asked, can you apply for both loans? Yes, you can apply for both loans. You cannot use the proceeds, particularly for payroll payments, using both funds. But you could use your EIDL loan to pay utilities, advertising, accounts payable, then use a PPP loan to pay for your payroll cost. So the next steps, if you've not already done so, or if you applied for that economic injury loan prior to Monday, March the 30th, you need to reapply. And that's because the process changed and the mechanisms changed, and it made it much easier for small businesses to apply. So go into the website of covid19relief.sba.gov/#/ or in the common vernacular hashtag. So covid19relief.sba.gov/#/ That is the new application portal. The process has been streamlined and much easier, and most businesses are reporting it's taken about 10 minutes to complete the operation. A couple of things that you might want to do before you start out the application, because it'll make the process go so much smoother, is one of the questions within the application is asking for the last 12-month sales prior to January the 31st. Or another way of saying that is you would need to report your gross sales for February the 1st, 2019 through January the 31st of 2020. That's a 12-month rolling period. Similarly, you will also report your cost of goods sold during that same time. Many service businesses would not have a cost of goods sold versus a manufacturing or retail concern would normally have a cost of goods sold. So that might be one of the differences. Service-based businesses might see this number as 0. In other concerns, they might have a 25 to 50% cost of goods. But if you calculate these ahead of time, this will streamline your application process. Also, one of the requirements within the application is listing out the total number of employees. This is full-time and part-time employees as of January the 31st. This is not including your 1099 contractors. This is just a number of W-2 employees, full-time and part-time. And if you also have your bank routing and account number available, that's also contained, because that advancement is going to be a direct deposit within your checking account. So it's a very streamlined process, should take most businesses about 10 minutes to complete. The PPP loan, conversely, is applied through your local lender. So you need to first reach out to the bank where your business checking account is. And every bank has a different application process. They might use a common application form, but they might be requiring additional documentation. And some banks have a spreadsheet that they ask you to inquire so they can help you determine your payroll, or you might need to be determining your average payroll. So one of the things that you can do is looking at your internal financial statements, or even looking at your W-3, which is a recap of your annual W-2 wages for 2019. Take that total number, divide it by 12. That gives you your total average payroll costs on a monthly basis. Multiplying that number by 2.5 will give you the amount eligible for that loan. Again, follow your institution's guidelines as it is required for the PPP loan. And there's a lot of resources that are available. Encourage you, keep checking back onto the Chamber website, onto the Cherokee Economic Development website. things are rapidly changing, conditions change, information comes in that we're able to apply. And not every question has an answer right now, but tomorrow there might be a better answer of how they might apply to your particular business. And we also encourage businesses to check out our website at georgiaSBDC.org as we continue to update and help businesses navigate this process. At this time, Heath, I'll let you stop, or we can talk with Alfie as well.
Thank you so much, Drew. We did have a few questions that came in. Some were asked more than a few times, so just want to hit a few of those real quick, if that's okay.
Sure.
A number of businesses are having issues with, say, their respective bank, and the bank has told them they're no longer accepting applications for the PPP, and they've contacted others which say they have to have an account with them. What are their options at this point? Can they go to the COVID-19 relief.sba.gov that you gave earlier? Or, I mean, what are their options?
Well, as I said, everything changes. So that lending institution that says we're no longer accepting applications could change tomorrow. So keep checking back with your institution, because that answer will change daily. And you may have heard yesterday that there might be additional funding that might be coming to support these programs. So that's another thing that is changing. And we're working on developing a list of other PPP providers that people can reach out to. And is check with your local lending institutions. Start locally as much as you can. But this process is changing daily, and those banks that are participating is changing. And the answer might be no, but it will be yes, and the portal is back open for those institutions tomorrow.
Thank you, Drew. Another one was, what are the minimum loss of revenue thresholds to qualify for any of these loans?
That is a determination made by the SBA. And so going through the EIDL application is reporting your total sales and total expenses. That is where they are going to determine the amount of the economic loss that you're going to have. A general rule of thumb has been that it's the maximum amount has been 50% of a business's gross profit, but that is not set in stone, as every industry is a little bit different in every condition. But the amount that is available is usually a general guideline is 50% of your gross margin.
Understood. Another one is, I have an S Corp and currently pay myself via owner's pay and personal expenses on taxes. The comment was, it looks like there is no relief for this attendee because they do not W-2 themselves.
Okay.
Is that accurate?
So in those conditions is for the amount that you are eligible for the payroll portion is the W-2 income that is in there. We're still awaiting guidelines if the forgiveness portion can be included in owner's compensation. This is one of the things that is changing every day as the SBA looks at these conditions and sees. So what that ruling will be changes, but the maximum amount of the loan is based upon your W-2 income, but the forgiveness portion may include your W-2 as well as that personal compensation. This is one of those issues. Keep looking for changes.
Understood. Thank you, Drew. We've got time for about 2 more questions, so I'll make those quick. Can company paid health insurance be included for payroll cost?
Okay, in determining the eligibility of the loan, it is not included. But in determining the eligibility of forgiveness portion of the loan, the health insurance cost is included. So it's not used in the front end calculation, but it is used on the back end forgivable portion of that calculation.
Thank you, Drew. Last question is, can you comment on how the SBA bridge loan would work with the idle loan? Most small business owners don't really want to take on any extra debt. They just want to be able to hold on until their revenues improve.
Yeah, and the bridge loan is still something fairly new that's out there, and is taking the economic injury has taken all of the attention that it is away. You can apply for both. That bridge loan is still going to be through your lender, but the interest rate and the attractiveness of the economic injury loan may be as beneficial, because a bank's attention might be on this PPP processing, and they just may not be putting that bridge loan in there in the same process, because they understand they want to get these things processed. And that's the other thing to understand is a bank has to go through their kind of regular approval process. This is going to take more than a day for them to approve an application. It could take a week or two or more, depending upon that bank's particular application and review process.
Thank you, Drew. I've got a few quick questions for you before we look to wrap up and keep this meeting on time. First would be, can you speak to the employee retention credit part of the CARES Act as opposed to the loans?
Okay. We haven't gotten full definition on that. This is just one of those guidelines, but this is the basic gist as I understand it. If you did not apply for that PPP loan and got that forgiveness, that same 8-week period that you are paying out payroll, you will get a tax credit for it, not a deduction. You already have that deduction. What it will turn into is a tax credit for those same payroll expenses that would have been forgivable in a loan, now become a tax credit eligible for the end of the year. There'll be a lot more coming out on that in the coming weeks. Is that many businesses may choose, because there are some businesses that business is good and they're continuing on.
Thank you, Drew. Another question is, and I know this is getting very specific, but there have been a few notes where Wells Fargo may not be accepting any more applications at this point. Is that accurate information? And two, what should those the Wells Fargo clients do in that instance?
Well, Wells Fargo has asked the Federal Reserve to extend their lending authority. So that's one of the things that we're waiting on. That's why I say they might be limited right now, and that answer could change tomorrow, that their lending authority got extended. So it's just one of those things, is it could change any day.
Thank you. Another question, what are the guarantee requirements with the idle loans? Is it liens only on business assets, personal assets, etc.?
The SBA has not been real specific on this. On some things, they do what is called a blanket UCC filing or a blanket collateral filing. There's not an attachment to a specific thing. Every business is different of what is their collateral base. Collateral on an economic injury loan is not the determining factor for that. They might ask for it, but if that loan is under $25,000, there is no collateral. So it's only between 25 to when it's between 25,000 and above, where the SBA might determine that a collateral might be there. And really what they might be looking for is a commitment and not a piece of collateral.
Thank you. If you get an advance from the idle, but do not want the loan itself approved, can you turn down the loan and keep the advance with no repayment?
Yes, you can. Actually, what typically happens in these economic injury loans, because this program has been around for decades, because this is how we normally respond to hurricanes, droughts. We actually did drought disaster loans about a decade ago. And we had those going on in Cherokee County. But normally what happens in these applications is usually about 3 weeks, the SBA will respond and says, all right, you've been approved for a loan up to X amount of dollars, say $100,000. At that moment, you will have an option to say, I will take the 100,000. I only want 50. I only want 25 to get below that collateral threshold, or you can say I want none, and you can keep the advance portion that was there. So you will have options. It's, again, there's two parts to this: is the advance, which is doesn't have to be repaid back, and then the total loan proceeds that might come. And so you will have options when the SBA gives you that final dollar amount, how you want to use that. And you can actually ask for more. If your loss may have been greater than when you applied, you can actually ask for more. The SBA might require additional documentation, but there have been cases where they have increased the amount of the loan.
Thank you, Drew. And thanks to all of our experts that participated today. And thank you to our attendees. At this point, I'm going to flip it back to our president, Misty Martin, for some closing remarks.
Thanks to all of you. We appreciate your insight. There are a lot of interesting points to think about as we restart our economy. And Drew, when we called Drew last week, I asked him how it felt to be one of the most popular people in the world, because I knew that they had been getting blown up with questions, and they've been working around the clock to help our small businesses. The Chamber and our office, as we've mentioned several times, are coordinating resources on our websites, including links to SBDC and the programs talked about today. For those of you that ask questions that we couldn't get to, we will get answers to those and get those out to you. We're all already doing this, but please remember to shop our local businesses online, order takeout from your favorite restaurants, beer from our local brewery, Reformation, stay at home, and thank your healthcare workers and your first responders. Pam and I want to thank you for your time today, and thank you for being in Cherokee by Choice. Have a great day.